Okay, now that we've gotten some of the basics out of the way, let's step through taking the charting piece and the spreadsheet piece and put them together for Robert Lichello's Automatic Investment Management, or AIM system. Okay, so in the previous video we looked at a chart of Sorrento Therapeutics, and what I'm going to go over is we're going to make a theoretical entry in this, and this is actually one of the stocks that I'm in, and where we're going to wind up entering here is pretty close to where I entered. So I'll go over in another video, how to pick stocks and kind of, how to choose an entry point. But for this one, what we're going to do is we're going to use the 9-day period, the cyan dots here, as kind of our entry trigger. So we're not in this stock yet. We've chosen this stock for various reasons because we think it'd be good for our portfolio. And now we're looking at a place to enter. Now, obviously, ideally, you do not want to enter, on a peak, right? You want to enter low, so hopefully you can make some money and set some cash aside on the move up. So in this case, we had this nice peak here, and let me turn on my ruler, and so we're up here, and we're gonna follow the 9-day down. Okay, so the cyan dots, we're gonna follow the 9-day. Now in this case, this works out really well, and we're all the way down here, right? So let's see, we look over. I'm going to zoom over here. We look over at our indicators over here. So the 9-day, so we would have used this as a stop, as a buy stop for a stop limit order, and I'll cover that stuff in another video. But for right now, this is where we would have our trigger, okay? And as you can, so at 5:06. Now, as you can see, the next candle, hit that. All right. So in other words, at price, the price opened down here, rose up here, and in the meantime, triggered 5:06. So that's our entry point. Now let's go flip back to AIM for a second, to the spreadsheet. All right. Now here, what we're going to do is, this is the basic template. And what we're going to do is we're going to duplicate this. I already have one, but we're going to do the whole thing. Okay, and we're going to change the name of this to the stock symbol. Okay, and we're going to change both of these. Now, I'm using numbers because I work in the Mac universe. Of course, if you have Excel or whatever, the same things will apply. Okay, so now the date. Of course, we're kind of doing this retroactively, so we're going to go back here. Okay, so this is the stop at 5:06 that we set on 22 June. So this is actually triggered on 23 June. So we're going to flip back here, and we're going to do 6/23/2020. Okay, because that was actually last year. Wow. Okay. And now your entry price might be a little bit different due to what's called slippage. Sometimes whenever orders are filled, they aren't filled at exactly the price that you want. But we're just going to assume that it is here for the sake of argument. So we're going to assume that the stop was triggered at 5:06. Okay, so we enter that there. Okay, skip over that guy. Now, for the sake of argument, we're just going to assume that we're buying 1,000 shares of stock. Okay. Now, in this example, what I usually recommend is that you have whatever amount of stock that you buy, that you have between 20 and 30% cash set aside right off the bat. Okay. Now, so this is just set up to, if you look down at the bottom here, you can see that it's 1,000 divided by the stock price. So we simulated a buy of 198 shares. Now, the other thing with the way I'm doing this is that normally, the AIM calculator is set so that however much stock you buy, you have the same amount of cash set aside. Now, we're going to cheat. okay, because we're going to leave the calculator think that we have $1,000 in cash set aside that we can use to buy if price plunges, but we really don't. We're only going to use about 20 to 30% of whatever your stock buy is. And I'll get into why that is some more later, but let's just work with the spreadsheet for now. Okay, so we bought 198 shares of stock at $5.06. So we have, roughly $1,000. Okay, we're going to, kind of dupe AIM into thinking that we have more cash than we do, just because I think the calculator works the best. So none of the rest of this stuff, you don't change any of these other fields here in the first line. You don't change any of this, only the fields in yellow if you need to. And the spreadsheet is set up, the template is set up so the cash value basically just copies the amount from the stock value. Okay, but anyway, so we have this noted in here. Now what I do to keep track of things in TradingView, I go over here to text and price label, and I go over here to where we made our entry. Okay, and for entries I just make it a yellow label and I set it to that. Okay, so that shows where we've entered. Now the next thing we have to figure out is where we're going to start selling. Now you can go and play with the AIM spreadsheet here, and you can just start plugging in. There are a couple ways of doing this. You can start plugging in prices if you want. So like if you plugged in 6, you would see over here that you actually generate a sell order for $67 and would be selling 11 shares. Now I mean, if you're dealing with smaller position sizes, you can, because commissions generally are free now for trading, they didn't used to be. You can sell and buy small amounts when you have a small market order. But let's go big here. Let's go big. So let's flip back and look at our chart. Now you can play around with a spreadsheet, or you could do something like this. If you look left, and as someone I followed for a long time and learned a lot from said once, look left to be right. So this over here looks like a pretty good potential resistance zone, right? So your price at 506, the price comes up here to this resistance zone. That might be a good place to trigger a sell order. So now that's at $10. So, but yeah, here's what we're gonna do. We're gonna set it just under that. Okay, we're gonna set it for $9.99 because sometimes price will go up just below the resistance zone, and and then drop. So we want to put it just below that. All right. Now, if you look over here, okay, you'll be selling. Now, this is the suggested number of shares based on the market order. So it's like, wow, sell 78 shares, and you would already be at 97% profit at that point. Okay. If it gets there. Now, let's flip back and see what happens. Okay, so what I do, I go and I add a horizontal ray above where I initially make the order. Okay, and for orders when I'm going to sell, since I'm going to be making money, I make that green. I'm going to make it $9.99. Okay, just like that. And that's just a visual indicator of where AIM has its sell order. And then you would go in your brokerage software and you would set a sell limit order for good till canceled, including regular and extended hours. And I'll be doing another video showing how to do that on the Thinkorswim platform for Ameritrade. But again, for sell orders, you want to use a sell limit order, good till canceled, for regular and extended hours. Because I say extended hours because extended trading hours, people get nuts. And I have had some phenomenal profit-taking sessions in after-hours trading because people just go and they buy shares at ridiculously high prices. So take advantage of that. All right, so we have set our order, okay, based on this resistance level. And again, you could also just plug numbers into AIM, and whenever the sell is triggered, you could put that in. Either way is fine. I have just found that, especially with more volatile stocks, go big, Don't get too conservative. Okay, so as you can see, price goes up, price goes up, price goes up, and here we actually would have triggered that order, right? Okay, because price is broken through this line. So we're going to go back and we are going to say, okay, yes, and let's say our brokerage firm comes back and says, yes, you did indeed sell 78 shares. So we are actually going to type in minus 78 shares. Okay, and I also bold that just to confirm that, okay, it's kind of just a mental check. So right now you're sitting at 97% profit just with that one trade. Now that's not going to happen all the time, but that's not bad. Okay, so, and we also want to put in the date, which is going to be 31 July, so 7/31/2020. Okay, and that's our first trade. All right, so what do we do then? Well, since we sold, and it looks like price might continue going up, we want to keep selling. Now, on this chart, we don't have any handy-dandy guides for, like, what we would do next. Let me add in our little price flag here. Now, for sells, where we execute a sell, I make the flag green. Again, because we just made some money. Okay, now we don't have any handy-dandy levels because, remember, all of this off to the right of the chart we haven't seen yet. We don't know what's over there. Okay, so we're just kind of, this is where we are. So this is where you would come back to AIM and say, okay, let's say I don't want to sell before I get to 20% of my last sell. Okay, so we're going to sell 24 shares at $11.98, and that's what we're going to set this guy for. So we're going to set him for $11.98. All right, and then I also I'm just going to move him back over here because the reason why I put this over my transaction position is it gives me an idea of how long it's been since that this trade is in place. Okay, so it's not long before that gets triggered again. Okay, right here. All right, so we flip back to our spreadsheet now. In the template, the third row is important because that is your template within the spreadsheet for all the rest of your trades. The first two rows have different calculations in some of the cells that you don't want to mess with, and so the third row you want to copy before you enter your shares bought or sold here. So we just copy it, right? You just copy and paste it just like that. Okay, then we're going to enter this trade. So we're going to put the date in, and that is for August. So August 4th, 2020. And we're going to say it's, go back here. We're going to say it's for $11.98. Okay, and I just bold that as a cross check, and we sold 24 shares. Bold that. Okay. Oh, and also look at that. So at that point, you're up to 121% profit. All right, and this is already set because you copied it. to be 100 or rather 20%, 1.2 times your previous sell. Okay, so 1437. Alright, so let's see if we can grab this guy. Sometimes it's a bit of a pain on here. So 1437. And let's adjust that. Looks like that's 148, something like that. Okay. Probably 147. Alright. So, and look, just a few days later, you hit it again. Okay. So once again, 1437. Add another price label here. Okay, come back here, and again do the same thing that you did before with row 3. Copy it first, paste it to the next row, enter the date, which is 5 August, so 8/5/2020. Okay, 1437, to kind of back up over all that stuff. Okay, and then for that we sell 16 shares. Alright, then our next 20% gain is at 1724. So we're going to change this guy. Okay, let's roll about 149 or so. Alright, now, and again, you know, we would not know what price is doing, right? We only know price to that point. It's right here, okay? But as it turns out, we get another sell at 1724. Okay, again, duplicate this. Back. First put our flag on. Adjust the price if you need to. Okay, 152. Alright, so 1724. Wait, what's the date? I'm time challenged. Okay, so it's 8/10. Okay, 1724. Hold that puppy. We sold 14 shares. Alright, and then 2068. That's our next one. Hello, come on. Okay, now as you can see, in this case we don't actually get that. We don't get to that 2068, 2069 zone. And again, we're not trying to pick off the tops. Now it could be that in after hours trading, maybe somebody did pick this off. Because like I said, people are just nuts sometimes whenever they do that stuff. But here's the kick, okay? So price now starts going down. We start seeing profit taking here. Alright, so we have 1724 as our last entry. Now, okay, you can see you start following the 2-day, right? The white dots. Down, down, down. So let's take a look here. Let's plug in, and you start plugging these into AIM to see if it tells you to start buying. So we plug in 1260, no. But you can see we're getting close because this changes from negative market orders, which are sells, to positive, but you don't have a sell yet. Now the sell in the spreadsheet, the sell and buy signals are based on 5% of your cash value. So the more you're in these trades, you know, the more it expects you to move. Okay, so what do we do? Because the 2-day bounces back up here. Well, that's fine. You just keep following the 2-day. You follow the 2-day until you get a buy. Now down here it's at 937, and the high for this one is 945, so we're going to say that we got a buy here. Okay, so we add our price label flag, and that would have been at 937. Now this one, what we do is we change the color to white, so we can track the buy that we've made. Okay, so we know that's a 2-day buy. Then we go back in here. I kind of cheated a little bit because I knew that was going to be an actual buy. Okay, same deal. Copy your row before you enter the actual shares. Then the date, 26 August. Okay, bold that little guy. Okay, and we bought 35 shares there. Okay. Now, something interesting to look at. So, all right, price has declined by 45%, okay, from our last transaction. But look at your profit and loss. You're at 115%. Okay, even after, you know, your share value has, or the price has dropped almost 50%. Okay, now looking back at the chart again, so now we've made a 2-day buy, we've made a white buy, so we're going to pop out to a cyan buy, okay, for the 9-day, and we're going to drop, keep following this down. Okay, so here at 784, we get another buy triggered. So we're going to add a little price label to keep track of things. Okay, and we're going to color code it, because that makes it easy to keep track of stuff. 784. Alright, now we go back to AIM, copy, paste, and again check the date, 16 September, and the price was 784. Okay, bold is kind of a cross check, and we would have bought 38 shares. And again, I'll go over how to actually do the transactions in Thinkorswim, because these would have been pre-programmed in. You don't have to like watch these to, you know, to have them set up. All right, so now what happens? Well, look at that. Okay, you see price starts going up. Now after you make a buy, and I didn't show this over here, but once you make a buy, your first assumption is that, okay, price may reverse and start going up again, so you need to set up a sell. But I kind of cheated a little bit because I knew the price was going to go up after this. The question is, will it go up enough? So at 784, let's plug in where price would have to go to trigger a sell. 11, 12. Okay, so price would have to go up somewhere around between $11 and $12 to trigger a sell. All right, so let's just say 12. Because again, there's no right or wrong here. So we're gonna go back up here to this little guy, and we're gonna set him at 12. I'm gonna kind of move him across here. Oops, sorry, wrong button. Reset to 12. Okay, and then we wait, and as you can see on this day, yep. Okay. Price took out our sell stop. So once again, we would have a green flag for money. Okay. And then we enter here. Oh, date, I'm chronologically challenged because I always have to go back and double check these. Okay, so 9/29/2020. We sold at $12, and we sold 15 shares. And look at our profit now, it's at 157%. Okay, and then you would go back and you would set another sell, let's say again 20%. Okay, so we set it at 1440. Just our little marker, and again, this is just a marker. Keep track of things. But again, look, price goes down again. Okay, and we're going to do, I think, let's do one more of these. So the first thing you're going to do, you're going to follow the 2-day. Okay, follow the 2-day down and down and down and down. So using our ruler from $12, it goes down here, so it drops almost 40% before you get a buy triggered. So, and you would have been putting buy stops in, and we're going to see what, okay, so that drops to 722. And that would definitely be a buy. So you can copy, paste, add your flag to keep track of what's going on. Okay, so it would be at 7:22. Again, white flag for 2-day. 7:22. And oops, what day is it? What day is it today?
The 10th.
No, it's for November. We've gone back in time with Doctor Who. Okay, it's 7:22, and we would have bought 46 shares. Okay, and again, what you would do next is you would set up for a buy, or I'm sorry, a sell. Okay, because anytime you make a buy, you want to be prepared to make a sell. But if price continues to go down, then you put in another buy order. Okay, so anyway, at 7:22, we're still at 90% profit. But look at this, we still have we have 170 shares. We started out with 198, so we have almost the same number of shares we started with, but we've doubled our money. And whenever this does swing back up again, you're going to make even more. So anyway, that's how you do it, or that's how I do it. And again, even if you get a bad entry, because I've had some bad entries where, I've actually come in pretty close to the high, but the way AIM works, again, unless price totally collapses, it will recover. I mean, you will make money as long as the stock is volatile, as long as you have nice moves up and down, as long as the price recovers. But this is basically how you do it. Enter your prices, keep track of things, because it helps you visualize that. Keep track of things in the spreadsheet, set your buy and sell orders, and really that's all there is to it. There's some more details, but that's the main thing. So again, if you like this video, please hit the like button, subscribe to the channel if you find it useful, tell all your friends, and good luck trading.